Everyone wants to get some crypto these days, but it can be pretty intimidating as a task. There are so many options to choose from, and you don't even know where to begin. If we're being honest, many digital assets aren't worth your hard-earned savings, but Bitcoin, this top crypto, is really valuable, and you should definitely consider it. Let's get into it. First up, remember that Bitcoin is very volatile. Chances are you'll already know this. Bitcoin is very volatile, and you should never underestimate this statement. To put things into perspective for you, remember that it's even more so than growth tech stocks, which got daily price swings of 10%, and major bear markets are not uncommon here. Let's rewind back in time a bit. Last year in 2021, Bitcoin's price fell more than 50% from its peak to its trough at one point, and then it just went back up. Do you see what we're talking about? You never know what's next, and it's not as predictable as you'd want it to be. As of right now, the top crypto is off about 69% from its all-time high of $69,000, and it hit in November of last year. So yeah, this makes investing kind of risky, right? Well, what does that mean for you? And more importantly, how can you help yourself? First up, you must understand that if you want to get some Bitcoin, you will have to prepare yourself for these ups and downs. If you don't do that, you'll want to sell immediately after any significant price move. This will make you lose out on many potential huge returns in the long run, making your investment pointless. Plus, you should remind yourself that this volatility is very normal and should be expected. Bitcoin is only a 13-year-old currency that's still in its developing phase. It won't be in straight line, and you should only invest the money you're willing to lose if it's worst come to worst. That could be 1 to 2% of a well-diversified portfolio. Coming up, you need to know that Bitcoin is here to change money. If you haven't noticed this yet, you should probably know that Bitcoin is attacking perhaps the largest addressable market in the world: money. Yes, we know, its use as a medium of exchange isn't really a thing today. You could even say that's non-existent, but it's still being viewed as a store of value. Think digital gold, if you will. So before investing in it, you need to understand that the network can only process fewer than 5 transactions per second. Every new block is created every 10 minutes. Now, if you compare it to payment networks like Visa, you'll see that it can handle a massive amount of 65,000 transactions per second. It's clear to us that if you want to be able to use Bitcoin in day-to-day transactions, something has got to change. But don't worry. Developers have begun working on a Layer 2 solution known as the Lightning Network. This will help different parties to open payment channels with each other, letting them transfer money without any fee. Still, you should remember that crypto has the power to change the nature of money altogether, which is heavily controlled and manipulated by central authorities and the government. If you're looking into it for these reasons, you need to remember that while it still does have the potential, the road to it is still very long and bumpy, so you need to have some patience here. Moving on, this top crypto operates a proof-of-work consensus mechanism. We know that's a mouthful. Let's break it down for you. Unlike the other coins like Ethereum, Cardano, or Solana, Bitcoin works on a proof-of-work consensus mechanism. Simply put, it needs large amounts of electricity to validate new transactions or create new Bitcoin. This process is called mining, a word many of you should be familiar with by now. People who don't like the currency would tell you that this network is awful for our environment. They'll also get data to support their argument, which should show you that the coin consumes almost the same amount of energy as a small country would. Sounds alarming, right? We thought so too. But it turns out that Bitcoin mining takes up the cheapest energy sources. We're talking about wind and solar, so it's not harming the environment, but instead supporting renewable energy development. Not just that, but it can also help balance out the power grid. We'll tell you how this works. When you have excess energy, it can be used to mine Bitcoin instead of wasting away. And in times of peak power demand, you know, like a heat wave, miners can turn off their machines and sell energy back to the grid. Now that is amazing. No one considers this, but it's a great thing to remember before investing. After all, so many people are discouraged from buying Bitcoin because they don't know about these things. So the next time a do-gooder tries to come up to you and say Bitcoin is terrible for our environment, just remember these things we told you. Oh, and do them a favor and let them know too. Next, thinking it's a bubble won't save you. Most investors would know what we're talking about here. Basically, a bubble is what happens when a particular asset price is far more than its actual value. Many people with solid command over their finances will tell you that Bitcoin is the same. It's a bubble. Despite this, we see many investors spending money on the currency with almost zero caution and no safety nets. That's definitely not a smart move when you know the price isn't attached to its value. Why is that? Why would people still be so careless with their life savings when they know about the bubble? We've brought you some answers from Bruce Mizrak, an economics professor at Rutgers University. Bruce tells us that it's common for people to buy an asset, even knowing that they're overvalued. This is because they expect these prices to increase even more. He said they all think they can make a ton of profit and just exit the system before the bubble crashes. You should be smart enough to know this isn't how it works. Remember, everyone else is also thinking the same. All of you simply can't expect to exit the bubble before the crash. It crashes for a reason. Kent Baker, who teaches finance at American University, says it's often too late and you face a massive loss instead of that profit you were aiming for. And like we already told you before, the currency is very volatile. It won't give you a hint before crashing. Being careless with your money isn't the way to go. Now, whatever reason you're investing may be, please don't let it be FOMO. You can't deny it. FOMO's natural in almost every walk of life, including investment. In today's world, we hear so many stories of crypto millionaires and people living their dream, all thanks to the wonders of this top crypto. You're bound to fear missing out on these perks, but FOMO isn't the motivation you should need because more often than not, it backfires. It's true that investors often fall prey to social bias that our professor friends refer to as herding. The term means precisely that. They follow the crowd. Not just that, but they believe that these millionaires on Instagram just know more than they do. They listen to their motivational speeches, watch their mansion tours on YouTube, and value their advice. We don't need to tell you how dangerous that is. Blindly trusting anyone on things related to your money will never end well for you. You may look at these people and see, oh, there's safety in numbers. This guy invested a considerable amount of his money into Bitcoin and he ended up buying a house. Surely we can't all lose our money. If we haven't made it clear before, let us remind you, yes, you can. Really quickly too. We're trying to say that before you decide to invest, always get your priorities in line. What is your motivation? Do you really want to invest, or is it just because everyone else is doing it? If your answer is the second one, you may want to reevaluate some things. And finally, get all your resources together. There's still so much you can't know. Watching this video, you'll probably get the idea that understanding a digital asset isn't easy at all, with their fundamental valuation even more difficult. With most stocks, you have access to a price-earnings ratio, right? That tells you what investors are willing to pay for a company for every dollar of its earnings. Now, this is something that can help see if a company is being overvalued or undervalued, which can help you decide if you want to invest or not. Well, that's not how it works with digital tokens. Here you're mostly in the dark. You're also pretty confused about how to manage digital transactions, keep away hackers, avoid losses, all that stuff. You need to help yourself, get educated about how crypto works, and don't do anything until you're completely clear on everything. Learning is essential, and nothing will work with a magic wand. Money isn't the only thing you gotta invest. You need to give some of your time too. That's a wrap for this video. Are you ready to buy some Bitcoin now? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.